guarantee so you have nothing to risk. Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the December 11th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, we've got you covered there, too. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. All the indices in the U.S. trading to the downside. The Dow is off 76, the S&P 23, the NASDAQ 114, the Russell's off 19. Leading the charge to the upside dollar-wise, stock-wise, it's Abcelera Biologics. 3150 to the upside, 157%. Walt Disney up 13%, $21. 4D Molecular Therapeutics up 80%, $18. Solar Edge up $15. To the downside, Booking Holdings 47, a little over 2%. ALX Oncology up 26% or $30. Greenwich Life Science up 22, 31%. Yikes. Tesla's down 20, about 3% out there. So let's begin with the chart that we were looking at during the 1 p.m. update, because I really think this is the important chart for everybody to pay attention to, and that's this. We're taking a look at really the combination of the spot volatility index, which you and I know is when that spot volatility index closes above the 50-day exponential moving average and stays above the 50-day exponential moving average, the S&P is susceptible to moving lower, and significantly lower if it is below support. And when we take a look at the ES Mini, support is 36.4125. We're 1 point or 1/4 point ahead of that. We're 36.4250 right now. What you're going to want to watch at the end of today's trading, does the ES Mini close below 36.4125? If the answer there is yes, that's an indication of a change in trend. If you get the spot volatility to close above the 50-day exponential moving average, 24.90, then you've got a really good chance that the signal is a change in trend out there. So that's all that you need to watch or observe as it relates to the S&P 500. Somebody might say, but Steve-O, can't you make that call right now? Well, I can make any call I want to, but I'm just narrating to you what the charts are communicating to us right here and right now. And I have not been able to figure out that 8-ball technique of being able to know the future. But we don't need to know the future. What we need to know is where support and resistance is, and especially when we have a combination of vehicles like this that will really assist us in understanding what the intention of the market is. If we take a look at the S&P 500 market breadth, so here what you and I do, as price is back at support or resistance, we look for additional clues. So one of those additional clues to be able to push the ES Mini down below support would be a flip in market breadth. What do you mean by a flip in market breadth? Somebody thought I said flip in market breadth. No, I said a flip in the market breadth out there. Maybe that's not what I said, but that's what I meant to say. Here, when we take a look at market breadth, what we're using is our TAS market profile system. We're taking a look at how many instruments are trading in the S&P 500. So 500 and how many ever instruments that are in the S&P 500. How many are trading above the top of their profile? Remember, the top of the profile is resistance where sellers are at. So other than making a topping pattern out there, TD9, Rhodes Momentum Indicator, things, wave number 7 of the Chapman wave, things along those lines out there. Short of that, when you are above resistance, price can continue to move higher. It's bullish, plain and simple. What do we have right now as of 1:11 in the afternoon is 157 instruments trading above the top of their profiles. Trading below the bottom of their profiles is 93. So this is still in bullish mode. And that's really all that I can share with you. That's all that I've got. No, it's not all that I've got. But with regard to the S&P 500, it is, and it's different than the NDX. Because I know somebody out there said, well, hey, Steve-O, as long as you're giving us the S&P, can you give me the NDX 100? Well, here it is. In the case of the NDX, we have a different story. Here we do have a crossover. Right now we have 19 instruments inside the NDX 108 that are trading above the top of their profile versus 20 below. It's really one instrument. So it's not like it's a total crash out here, but a close, still a close with a negative market breadth on the daily basis, other than if we're in some type of sideways action, and we're really not in sideways action when it comes to the NDX 100. Well, we are in the bigger picture, but that sideways action for the NDXs come back inside of the consolidation. What are you talking about, Steve-O? Here is the cash instrument. So I take that back. The NDX 100 is not back inside. Ooh, take a look at this. So here are the different consolidation patterns that are still in place inside the equity markets. The S&P is in the upper left, the NDX 100 the upper right, the Dow is in the lower left. There is no consolidation pattern going on inside the Russell 2000, just simply an A to B equals CD pattern. So inside the NDX 100, price is pulled back to support. It's the NQ, I believe, that is inside the consolidation. Yeah, so the NQ is inside the consolidation. That's your panel chart on the right-hand side. And more importantly, the NDX 100 is trading below the bottom of its bullish structure daily profile. That's priced at 12,380.50. Now, the interesting thing here is we had a close below it 2 days ago. Yesterday, it closed back above it. Today, it closed below it. You know, Stevie says you've got to have 2 consecutive closes to give you a confirming signal. So we still don't have the confirming signal in the NQ, but it doesn't look really great out there, no matter how we slice and dice it. Now, as opposed to just jumping around, which I am really is just jumping around, what I want to do is go back to that ES Mini. So let's go do that. Let me just switch over to a different workspace over here, and we'll pull over the chart for the ES Mini and get a feel for what it's doing and what to be watching for the rest of the day. So we know that support has held, and that's the bottom of that profile. What we also know is earlier this morning, about 6:30 or so out here, price was pushing lower, doing less relative energy, and that generated a Rhodes Momentum Indicator bottom. It did that with that bullish engulfing candle. What we can see here is since then, the ES Mini has defined for you and I the trading range. And the trading range is nothing more than the support and resistance of its TAS market profiles. You kind of get in the picture that these TAS market profiles are extraordinarily helpful for you and I. Well, maybe you're not getting that picture. You might ask the question, Steve-O, in the rally today inside the ES Mini, why did it find resistance where it did? And the answer is the 30-minute TAS market profile, 36.48. Why in the pullback did price find support at 36.24? Because that was the bottom of the TAS market profile. Voila. It's that easy. So what's the market doing right now? Consolidating with inside its 30-minute profiles. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Head Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, this is Tom O'Brien. Do you have broken or unwanted jewelry, diamonds, watches, coins, silverware, and other collectibles that you would like to turn into cash? Tiger Precious Metals and Stones will pay fair market value. We make it easy to turn your precious metals that are sitting around in your house into cash. Call Andy now at 727-329-8245 and he will walk you through our safe and secure process. Andy has been in the business buying and selling precious metals for over 15 years. Call Andy now at 727-329-8245.
TFNN has just launched our Tiger Dollar Holiday Sale. For a limited time, we've doubled all the Tiger Dollar bonuses, where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good for all TFNN newsletters, webinars, and services and never expire. Whether you're a current subscriber or just thinking of signing up for any TFNN products in the future, this is a great time to get your Tiger Dollars. Happy holidays from all of us at TFNN.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
For S&P 22. So let's go take a look at the weak indice out here. That is the NQ. When I say weak indice, I'm referring to the equity futures contracts that we're focused in on right now. So if we take a look at the weak indice, we can see that the NQ this morning, this was at 10 o'clock yesterday morning, bottom with wave number 7. Letter G out here, and that's what we look for in that 7th inning stretch. Now what we can see is we have a higher low with a Rhodes momentum indicator bottom. That happened right at 1 o'clock as we were coming on the air. You've got that nice piercing candle that formed. That's your bullish reversal candle. What we also know about the NQ, much like the ES, is we clearly know where resistance is at. And that's at 12,355. 12,355 happens to be the top of its daily profile. Now, right now, as we speak, the NQ is below the bottom of that profile. So it does have a first level of resistance. That is going to be your 12,309. Then above that, 12,332. And then finally, the 12,355 area. Above 12,355, 12,279.25. Only on a close above 12,279.25 will that have some kind of more bullish meaning. Otherwise, we just have this little sideways-ish type consolidation even that's going on in the 30-minute time frame chart. But again, watch 12,309.20. A close above that should lead to a test of that 12,355 area. So we've got a bottom in the ES. We've got a bottom inside the NQ out there. We know that support is held on the daily basis. Let's go take a look at the Dow. What is the Dow doing out here? The 30-minute chart for the Dow shows us a Rhodes momentum indicator bottom pattern that formed this morning as well. That was at about 7 o'clock when we got the bullish reversal candle. Price made a move, and in its case, I don't have a real clear understanding as to why price stopped where it did. I don't. Sometimes we do. Sometimes you feel like you're not. Sometimes, most times you don't. And in this case here, what we do know, you've got a valid bottom that is in place, has not been taken out. Price moves higher, pulls back to test what? The oscillator and change line, the red line. As long as price remains above that, it says more rally or counter trend rally. In this case here, it would be counter trend rally because of the red oscillator and change line. That red counter trend rally, its real key level of resistance here should be 29,931. That's the number you want to put down on a pad of paper. If price closes above that, that tells you about a rally going into the close today. Now, look, that'll be helpful for people that are short, that have got some profits out there, that are saying, if this thing does start to rally, here's the level to be watching, and if price gets above that, you probably rally into the close today, and that will help you to secure some profits that you have. So you've got bottoms in the NQ, bottom in the ES, bottom in the Dow. Let's go take a look at the Russell 2000. Russell 2000 right now is off 17 points. We're going to look at the equity future contract, just looking for some kind of signal as to what its intention is. There may not be one. If we do take a look at the Russell 2000, which we are, we can see that this bottomed yesterday morning, beautiful Rhodes momentum indicator bottom out here. As far as the pullback this morning, this formed an A to B equals CD to the downside. I can't draw it in on this version of the software, but you can clearly see the A to B equals CD. It looks like it was probably a 1 to 2 extension, 1 to 1.6, 1 to 8. With my guess. So it makes that pattern and runs right up into resistance. Where was resistance? 1921.80. Now, we knew about that resistance level before price got up there because that was part of the TD 9 count level. So it gets up to resistance, makes sense, pulls back to test this morning's low out here, the 6 o'clock morning low, and that is held. The key level for the Russell 2000 right now that it needs to clear, I would say, would be the 1905 level. Above 1905, the Russell 2000 would likely revisit that 1921.80 level. So look, folks, it still all boils down to really, I would say, the ES Mini today with regard to what its intentions are. And again, what you're going to want to watch here is really a combination of two things. Spot volatility index, a close above, right now it's 24.91. That's the 50-day exponential moving average, and a close on the ES below 36.41.25. Combination of both those would tell us to expect and anticipate price to move lower on Monday out there, as we would have a change in trend signal. Okay, enough for that. Let's do this here. There were a few questions that I did not get to yesterday. I don't have anything in the queue just yet, and I did write those instruments down. So let me move over to that set of charts out here. So one was Otis. So let's go take a look at Otis first. Not Otis Elevator. I don't think it's Otis Elevator, but Otis Worldwide. Right now, what we can see here is price is trading below the bottom of its daily profile. So what we know there is the daily message signal, directionally speaking, is bearish. It has lost support. It lost it yesterday. This will be day number 2 below it. Now, that suggests what? That price will move down to the next level of support. And looking at this chart, and just take a look at task market profiles, where is the next level of support? You see, you're exactly right. Steve-O, what we do is when we break through a level of support or resistance on a daily chart, we go take a look at the weekly time frame chart. We just simply go up a level. And by doing that, we can see that price is consolidating with inside its weekly profile, with price likely headed to 62.55. If Otis closes below 62.55, and is remaining below, which it would, the bottom of its daily profile out there, now you're getting change in trend signals. Now, let's go see if there were some topping patterns to go along with, that's CrowdStrike. That's the next one we're going to do out here. Let me get back to Otis. Let's pull over the Otis charts. Now, on this set of charts, I'm not going to have the profiles written in. We've already gotten those. We've seen those here. In the case of Otis, I don't have really a topping signal. You don't always get the topping signals, but what we do know at this stage here, you're below the bottom of the daily profile, you're below the oscillator and change line, and another area, a price target, in addition to the bottom of that weekly profile, is going to be the TD9 breakout area in the daily time frame. And this is suggesting that Otis wants to pull back to 61.09. That's the daily signal. On the weekly time frame, this does have a Rhodes momentum indicator top. That was confirmed last week. You're getting follow through this week. That really sets up that move back to the bottom of that weekly profile. But more important than that, if Otis closes below 62.55, that tells you about a change in trend. There's not enough data out here for us to really look at a monthly chart, so I won't do that. It's just too new. And so that's what's going on when we take a look at the charts for Otis. Whoever had requested that, I hope that helps you out. Thanks so much for waiting a day. Another request that came in yesterday, there were two other ones. One was to take a look at the equal weighted ETF and for the Qs, which we will, and the other was for CrowdStrike, CRWD. Whoops, didn't mean to do that. CRWD. See, I can't chew gum and walk at the same time. Good thing I'm not chewing gum or walking right now. Okay, so I'm pretty safe. If we take a look at CrowdStrike, right now its price is inside its daily profile that formed yesterday. So what you'll watch out here with regard to CrowdStrike is how does price handle the 174.82 level. If it closes below 174.82, it's back inside the range of its daily profile, which is from 150 to 171. It's bearish structured profile, so a close below the daily, the bot at the top of the box out there, would suggest a move back to 166.69. That is the center of it. Now let's go see if in CrowdStrike we have any topping signals or anything else. And the answer, my friend, is on the daily chart, we do not. Yeah, we do not have a topping signal on the daily chart. And the daily chart also shows us that price is above its oscillator and change line. That's also near the center of its profile, 166. So 166 is a real key level for CrowdStrike, CRWD. The weekly chart continues to look bullish, even though price is moving higher with less relative energy. Not enough data on the monthly chart out here. So it looks like CrowdStrike is getting ready to pull back to just test support, and that's in that 166 level. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're going to go take a look at the QQEW. That is the equal-weighted ETF for the Qs. There's about 108 or 109 instruments inside the NASDAQ 100 out here. And if we take a look at the QQQs, that's what we have up on our screen here, very similar to taking a look at the NQ chart in that we are below the bottom of its daily profile, which is 301.69. Now, the interesting thing here about the equal-weighted ETF is that usually that is the one, the instrument, that is telling you the real intent of the market out there. So now when we go take a look at the QQEW, we're going to see that price has found support at the bottom of its profile. It has not busted through support out here. So to the extent that, I think this came from the dead, might have been Mr. Bill who wanted to take a look at it. So to the extent that you're going to take your signals, your information from the QQEW, well, in this case here, the QQEW is not giving you a change in trend signal at all, as price remains above the top or the bottom of its bullish structured profile at 96.26 out there. Now, let's pull over Stevie's other charts. What we can see out here, what can we see? So this had a TD9 count top that didn't hold because we got to close above the bar following bar number 9 the very next day. Do I have really a topping pattern out here in QQEW? I don't. But if the bottom of that profile fails, meaning price closes below it, then what we're likely looking at is run down to 92.85. That is its TD9 breakout area. That's the message from the daily. The weekly time frame chart out here, let's go ahead and update this. We are in wave number 7. That is letter G. We know that, in fact, can be a sign of a top, but that can extend itself. And in order on a weekly basis for the equal-weighted ETF to confirm a change in trend, price would have to close below 94.92. And that's not really a change in trend. That's just simply a signal that there's going to be a further retracement because that oscillator and change line is green. On a monthly basis for the equal-weighted ETF out here, what do we have? We've got price moving higher, doing less relative energy. Bar number 8 on a monthly basis of a TD9 count. We know that bars 8, 9, or the bar following 9 can be topping patterns out there, but you've got nothing that's been confirmed just yet. So on the monthly, still bullish, says caution. That's all, caution. The weekly, still bullish, but says caution because of wave number 7. And the daily says, hey, you know what? I'm still trading above the top of my, the bottom of my daily profile out here. So I'm just fine consolidating sideways. So that was the message of the QQEW. Thank you to each of you for waiting an extra day for me to be able to get to those instruments for you. That being said, you're welcome. That being said, I don't have anything in the queue. And we've got half of the show to go. So it must be quiet Friday. Everybody must be out in the sun tanning. It's pretty darn cold. Actually, it might be up to 70 degrees by now. Thank goodness. Stevie doesn't like any weather in the 60s. Oh, it's not. It's 64 degrees out. Nope, 73. Okay, we're back up to 70. Thank goodness. Out into the snow today. Yikes, 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 yikes. Okay, so what do we want to go take a look at? Well, let's go look at the usual suspects here. Let's go look at Goldilocks and silver. Let me switch over to another panel on my screens out here so we can go take a look at them. In the case of gold, trading out, it looks like about 1843. The question is, what's going on at 1843 for Goldilocks? So great question. We're going to answer that. What we're looking at is the top of the daily profile. That is going to be panel number 2 from your left-hand side. That is the February contract. The top of the daily panel is 1837.70. As long as price remains above that, well, then it's conditioned. Then it suggests that prices could move to higher ground. Now, you're going to see that another trend line was drawn in here. It looks like it was drawn in yesterday. Maybe it was a couple of days ago, and I missed it out there. So that's going to be your upside resistance level out here. But right now, in the case of gold, it's just kind of neutral. It's above the top of that daily profile. What else is it above the top of? It's above the oscillator and change line. That's red. So the real key level to be watching for gold today is going to be 1831 even, Steven. If you get it closed below that, 1831, that's going to get you back below the top of that daily profile. And that's going to suggest, okay, we're headed lower again. And lower again is 1804 to 1779. Or maybe I should have said 1779 to 1804. But that would be the message of Goldilocks. If we take a look at silver, silver is also holding its oscillator and change line. And it is also holding the top of its daily profile. Now, this is a bearish structured profile. The top of that profile is 2388. As long as price remains above that, it's kind of neutral because you can see the descending trend lines that have held out here, and it is above the oscillator and change line. I won't bring that chart over because I'll bring it over. What the heck? Bring it over, Steve-O. So here, as we bring it over, you can see, so it's really, we're in this little neutral territory out here, a couple of small bodied candles out there. It's just tired. It's just taking the day off out here. So don't expect to see too much in the way of gold and silver. With regard to the U.S. dollar index, let's come back to the king out here. And we're not talking Elvis. We're talking about the U.S. dollar. Beautiful TD9 count bottom that is out there. Wave number 7, letter G. Price right now is above its oscillator and change line. You're going to watch if price can close above 90.91 today. That, in essence, will be the first close above the oscillator and change line since the end of October. That would be a signal that there is a further rally or counter trend rally. That further rally should take price up to 91.65. Above 91.65, the U.S. dollar index should run to 92.55. Above 92.55, you really have a change in trend signal. That is the TD9 breakdown level. But when we take a look at the U.S. dollar, it's got a beautiful bottoming pattern. If we take a look at the euro, in essence, just the opposite, not just the opposite, but the opposite because of its weighting, 57%, something along those lines. It, too, formed a TD9 count. Now, in its case, it was a TD9 count top. However, the euro, a bit stronger than the dollar from the standpoint that where the dollar is now breaking above or trying to break above its oscillator and change line, the euro has not broken through its oscillator and change line. So it is truly neutral here. Neutral because you've got a topping signal from about 4 or 5 days ago, the TD9 count, and but support is held. Bullish because support is held. So it puts us in this little neutral zone out here between 1.20 and then the high from the trading session of, I'll give you the date out here. That was the date from December the 4th out there. Bitcoin in the news. Let's go take a look at it. Bitcoin confirms a TD9 count top. Price never closed above the high of that TD9 count top. It then went after a couple days later and confirmed a Rhodes momentum indicator signal. Well, I take that back. That was earlier in the week. Right now, price formed a hammer a couple days ago. So we know if you close below the low of the hammer candle, it says if you're long, you're wrong. What that really means is that price will move down to 17,189. That is likely where price is headed to regardless. However, we have to respect the hammer candle from 2 days ago. Below 17,189, you should see a swift run down to 15,520. So that's what's going on with the euro. That's what's going on with the dollar. That is what's going on with Bitcoin out there. What else do we want to look at? Oh, I know what we want to look at, and that is light sweet crude. January 21, we had a request by Gary to take a look at light sweet crude yesterday. And so that's what we're going to do when we get back from this break. Steve Rhodes with TFNN. Be back shortly.
Hi folks, this is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has just launched our Tiger Dollar Holiday Sale. For a limited time, we've doubled all the Tiger Dollar bonuses, where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good for all TFNN newsletters, webinars, and services and never expire. Whether you're a current subscriber or just thinking of signing up for any TFNN products in the future, this is a great time to get your Tiger Dollars. Happy holidays from all of us at TFNN.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow turning slightly positive, S&P down 15. And let's go to the man himself, and that is Gary in Michigan. Gary, thanks for calling. Thanks for holding. How are you today?
Hey, freezing my butt off. It turned, the sun went down, and I hope you're enjoying the sun down there. But it's not as bad as it could be.
Yeah,
so it's still above freezing. So how you been?
Good, good. Hey, real quickly here, I know yesterday you wanted me to take a look at light sweet crude. I'd mentioned that I was going to before we went to the break here. So I'll do that, and then we can go take a look at your instrument specifically. But
gotcha.
Right now, with regard to light sweet crude, it is still bullish. You had a nice, beautiful move yesterday that was above the top of its bearish structure daily profile. You're still above that today. So it looks like light sweet crude wants to continue to move higher, higher to where on the weekly time frame, the weekly target is really an A to B equals CD to the upside out here. As far as the price target, I'd have to say back to the highs in the 58-ish type range out there. So that is light sweet crude, but I know that you wanted to take a look at a couple of other instruments. So one was the GDX, I believe, and what is the other? Is it EDIT?
Well, the other is a specific stock. It's EDIT, EDIT.
Okay.
It's the CRISPR technology, the gene editing technology, and it's ran. I've been in it a couple months, but it started to run Monday. And I'm just curious. I think it's going to pull back, but I don't know. I need you to tell me.
Sure. Okay. So we'll do the best that we can. Yes, this has had one heck of a run this week, a really wide-ranging bar, probably its widest-ranging bar Yeah, that's what it looks like out here. So it is above all resistance. Now, when I say all resistance, I'm referring to the profile levels, daily, weekly, monthly. So that looks bullish out there. It has had a big run. The question is this going to pull back? Is there any kind of signal with regard to the move higher yesterday? The only real signal is a potential for a seventh wave move out here, but I'm going to kind of put that off to the side and say maybe not so much. Boy, if it did pull back, Gary, it could pull back to 44 or 41, and there would still be nothing wrong with it. Now, if we take a look at today's candle session, it is an inside bar. The body of the candle is inside yesterday's body of the candle. The traditional, the typical, the high probability meaning of an inside bar is that the trend that was in place will remain. And this would be an uptrend out there. So I just give you that meaning out here. If I take a look at the weekly, you like this because it closed above its breakdown level at 34.47. I don't have any kind of a topping pattern out here. Yes, there's a large A to B equals CD to the upside, but not until we get a bearish reversal candle where that signal something else, more of a retracement. Because of that large run out there, Gary, it becomes very difficult to, again, the logical place for support out here is 44.41. You don't want to give it $20 worth of room. So what do you do in something like this? The last piece of information I could share with you on edit is the average true range over the last 10 trading sessions was at $5.36. And really your stop should be $5.36 multiplied by some type of factor, 1.27, 1.618. Those are Fibonacci expansions to stay outside the normal range out there, and just leave that in place as your stop. Because if you use something less than $5.36, I would just say just close it out, because that's just the average true range of movement out there. And so you're really not giving yourself a whole lot of room. So does that help, or what other piece of information can I get to?
It helps immensely. I took them off the table this morning, obviously, just because it was prudent. But I'm in options up till 21, 22. So I've got long term on this baby. So,
okay.
But I was curious if it's going to how much of a pullback it would have, just because it's still experimental. It still hasn't even been announced. It had a run because somebody kind of came out with it and was promoting
sure.
it.
So here's another thing that. Here's another thing that we can do. So we know that this trades in essence 6.5 hours a day. And what I like to have are equal time frame bars. So you can divide 6.5 hours. That would be 390 minutes. And you start dividing to figure out which increments give us equally weighted bars out, the equal time frame bars. That'd be a 30-minute. It'd be 65-minute. It'd be, I think it's 130 minutes out there, and I think it's 195 minutes. But I've got the 30-minute time frame chart out here. And on the 30, to assist you with what edit may be doing out here, or when could it possibly signal to you and I a change in trend, I would then drop to that 30-minute time frame chart. And what we haven't seen out here since this move higher is a break of support. Now, support being the TD9 count breakout support. That level on your 30-minute time frame chart is $50.10. That's still $10 below where we're at. But if price pulled back to there, that would be a place you could consider adding to it. And if price closed below that, that would be a signal of a potential change in trend. You would see those key levels of support failing on the shorter term time frames first before it would do so on a daily time frame. So that's what I would be watching here. So let's go to the next instrument that you wanted to look at, which was the GDX, if I'm not mistaken.
Correct. Thank you.
Okay. So in the case of the GDX out here, trading with inside a descending price channel out here, that's drawn in by the green diagonal lines to the downside out here. Prices below the bottom of its daily profile, very likely targeting the bottom of its weekly profile at 32.77 out there. If I look at the GDX, let's see what else. Okay. So the key level of support is going to be its oscillator and change line, which we can see has been tested today. That is $34.99 at $35. If price were to close below that, I believe I had this question yesterday with maybe it was John in the Tiger's Den. But if price were to close below $35, I know he was looking to add to his position. And my take was, the chart's take was, that as long as price remains above a red oscillator and change line, okay. But if price closes below that, then we're back to a falling price oscillator below zero, and that would say we would go back and revisit the low. So right now, a key level of support has been tested and held the last 2 days. That's $34.99, and it's very much like gold and silver out there. We looked at those earlier, Gary, and they're really kind of in a neutralish type position, short-term wise. They're in a neutral position. So we've got, in essence, the same kind of signal here, I would say, inside the GDX. And I was taking a look at the daily time frame. What else can I help you with?
No, that's good. I was just going to see which way you thought it might be going after yesterday. John did a great job. You guys work well together. So, yeah, so it just kind of confirms that I think I don't know which way we're going, so we'll find out.
But we do know that gold tends to, doesn't have to, but it tends to react with the U.S. dollar index out here. And the U.S. dollar index is not dead. I keep hearing that from folks, but I'm like, what chart are you looking at? If we take a look at the U.S. dollar index, it's got a beautiful TD9 count bottom. Prices above the oscillator and change line. We're inside a bullish structured profile. There's real key support at 90.64. Today it closed above 90.91. Suggests that the U.S. dollar index wants to move to 91.65. If that is, in fact, what's going to take place, you would logically reach the conclusion that you probably get pressure on both gold as well as the GDX. They don't always day for day trade in that direction out there, but it is, it's just one more piece of information. I'll put up the 30-minute time frame chart here for the U.S. dollar index. I don't think I'm going to get it done in time here, Gary, before the break, but just watch the U.S. dollar, I think. Okay?
Okay, great. And thanks for all your great help. I appreciate it. And then make it a great day and make it a great weekend. Be safe.
You bet. You too. We'll be right back, folks.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, Without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We've got a request to take a look at the stock for Disney. Big day today. Prices trade above the top of its daily, its weekly, its monthly profile out there, trading out at 178 and change. Was just at Disney a couple of weeks ago out there. Kind of interesting how in Florida at Disney they have figured out how to social distance, wear masks, and open up the theme park. The people in Florida, we must be totally different than the people in California. You'd figure out if you could do it in one place, you could do it everywhere. In the case of Disney, here's the weekly chart. You can see an A to B equals CD pattern. I can't draw it in on this chart out here. Let's look at the monthly and quarterly. Just try to get a feel for where maybe this is headed to out here. Are we at all-time highs? Yeah, we are at all-time highs, aren't we? On a yearly basis. Yeah, we're at all-time highs. So trying to figure out where this is headed to. Here's the quarterly chart out there. No top yet in place on the monthly. I don't have a topping pattern really to take a look at. So let me try to come back here and draw an A to B equals CD to help Michael with regard to where this might be headed to. So here is the weekly chart that we'll use to draw in our A to B equals CD pattern out here. The A point is going to be the March lows. The B point out here is really going to be the high in June, and it looks like the low in June as well. So you're already past the 1 to 1.272 level, Michael. Disney likely headed to 186.98 thereabouts. That's your 1 to 1.618 A to B equals CD, and that looks like that is the next price target. So, folks, that's the end of the week, the end of the show. Thanks so much for being here. Again, it really is going to boil down to where's the spot volatility index close. If it's below 24.87, market conditions are still bullish. If the ES Mini closes above 36.41.25, market conditions are still bullish. It means there was nothing more today than a test of support in the ES Mini. Stay tuned, folks, for 2 more great hours. Have a fantastic weekend. I'll look forward to seeing you on Marvelous, Magnificent, Magical Monday. Take care.